Forex, that refers to foreign exchange. And when you talk about foreign exchange, it's really between currencies, between countries. And you do it every day, especially like me, I travel to a lot of places, like the Philippines, Japan, Thailand, Indonesia, Europe, everywhere. And that's where I need to exchange my currency. I use the ringgit, or rather, you use the universal currency, which is the US dollar, and you exchange it into another currency, like the home country, for example, go to the Philippines, I have to change my ringgit into peso. That's basically what Forex is. So, in this module, we're going to understand really more of the details about Forex so that you, yes, you, have developed a basic understanding and can actually try out the trading on Forex, okay? And of course, if you are more advanced, then actually we'll even go into things like robots, which can automate the trading for you in this exciting world of Forex to gain financial freedom. Let's go to the inside, guys. Please note that this show is only for educational purposes. All trades that you see here should be taken first in a demo account and is meant to reduce your learning curve. Having said that, should you want to take real trades, you should consult your financial advisor first. Although I do trade real accounts, I'm not recommending any of these trades for you. It is up to you if you want to follow me and take it in demo accounts. Thank you very much. Okay guys, welcome to this introductory module on Forex and financial freedom. We're going to teach you how the basic fundamentals of Forex so that you can move forward and understand how these currencies, how they work, how to invest in these currencies. Again, I think it's very important for you to know that how to invest in these currencies, how you can make money and all that. It is a process, by the way. Okay? It takes time for you to understand. But better start now. Better start now. And at least in my Telegram group, you can have a way to actually practice things because I do give signals basically at least once every single day. Okay, one signal a day. Or during the bonus time, I give a lot of signals and you just pick. So this is more meant of an introductory module here so that you guys can get along to learning, because we need to learn about Forex, because simply Forex is important and it pretty much touches every aspect of our lives. So I'm going to show you here, this is basically the size of the Forex market here, right? It's about 1.3 trillion, which is extremely big. Okay, so it's extremely large for the size of the Forex market here compared to other markets. So here is the extent of the size here. I've got some statistics, some new ones and also some old ones. So it used to be like 5.3 trillion. It's now like 6.6 trillion, which is extremely large. So how large is actually the Forex market compared to the equities market? I'm sure you heard about the Dow Jones Industrial Average. Now, especially now in mid-November, where it's really making new highs, right? As stock market hit record levels, especially with the US-China trade war, maybe having a respite there with the Phase 1 agreement. But here's the size. You could see all the stock markets in the world, the equities markets, compared to the Forex market. The Forex market is 30 times larger, of course, because when you talk about trade of the world, right? When you talk about trade, it's about exchanging goods and services and all that, and it all involves money. And this is where the Forex really shines. So it seems like, the Forex market is really getting larger and larger and larger like that. And just look at the size here, and I think you'll understand the extent of really where we are, what we're talking about. And you can see the potential really that is brought about by this Forex markets. And this is a potential that I think that you should tap on. So when you think about currency pairs to understand Forex, just think about the economy and think about travel. So let's talk about some of this that are related to travel and also the economy. You see here the flag of Thailand. Now, you know that Thailand is one of the top tourist destinations in the world, whether it's Bangkok or Chiang Mai, or the islands of Phuket and Koh Samui. Basically, when you want to go to Thailand, you just have to convert your currency into the Thai baht, okay? When basically when you're going there, that's about tourism. Similarly, when you want to go to Japan, you know, Japan has a lot of great locations like Tokyo, Mount Fuji, or even my favorite location in Kyoto. You know, you have the Inari Shrine, okay? Inari Shrine that's in Kyoto there. And if you want to go there, you have to convert your currency into the Japanese currency, which is the Japanese yen. Similarly, if you want to go to Europe, say you want to go to Spain, right? You want to go to Spain, or even you want to go to France, you want to go to Paris, guess what? You have to convert into the euro, because you know the French franc is not being used anymore. So is the Spanish currency not being used anymore, and you have to convert all that into euros. Now they use the euro currency, but what if you want to go to London? You know, what if you want to go to London, right? You want to see the London Eye, you want to see London Bridge, you want to see Big Ben and all that, or you know, you want to go to see Wembley, right? I want to see Wembley Stadium, which is hosting the final of the Euro 2020 together with the semifinals. Guess what? You can't convert your currency into euros. You have to convert into British pound, because yeah, that's what the currency that the British use. The British use, although they are part of the EU, but they're going out, right? So with Brexit, they're going out, but this is where you have to convert it into British pound. And when you talk about the economy, right, you know, a lot of things are happening in South Africa. You see the currency going down. Why? Because South Africa has a lot of problems in the economy. And when the currency goes down like that, for example, the currency was going down recently because South Africa had to unveil the bailout package for Eskom, okay? Kind of like Eskom, the power company and all that. And when you talk about the economy also, I mean, one of the most well-performing currencies now is actually the Thai baht, right? The Thai baht is really going up against the US dollar. Why is this? Because Thailand is doing a great job with its economy. Its account surplus with the USA is very high. And you know that Thailand is also actually one of the largest manufacturers of cars here, especially in Rayong, and they export those cars. It's actually the manufacturing hub for automobiles in Southeast Asia. And that partly explains why the currency is really, really on a tear, and it's really going up here against the other currencies, against the Southeast Asian currencies, and also against the US dollar here. Okay, so really a great performance there by Thailand. But it just shows you that it's not all about tourism, but it's also about the performance of the economy in general here. Okay. So let's go to the next topic now that you understand the economy and how it interacts with the currencies to give you actually the currency value. So this is a site that I like. It's investing.com. I do recommend it for you guys. Want to see the prices of Forex, investing.com here. And it has a lot of financial news. So really, if you are on this site, you know what you need to do. Just go to the market. So let's go to the Forex market. The stocks, ETF, commodities, currencies. Yes, Forex rates. Let's look at Forex rates here. And you look at the how they talk about currencies, right? It's like euro against the US dollar, USD against JPY, which is US dollar against the Japanese yen, GBP, USD, the pound versus the US dollar. So this is convention, okay? Because out there, when you're quoted Forex rates, you really don't have something like, you know, USD, Euro. No, this is not the convention. It is Euro against USD. So that's the convention that they do here. And let's just see the price. Let's go to the bid price. So if you see Euro USD, it's 1.1051. So really, what does this mean? Euro against USD is 1.1051. So here's an example, Euro USD. So, you know, from what we saw just now at investing.com, this is 1.1051, right? So this is the convention Euro against USD. This is called the base currency. This is called the quote currency. You really need to look at the quote here, because when you talk about pips or percentage in point, which is how you measure the Forex movement, it is usually in the code currency. So 1.051 is the exchange rate between the euro and also the USD here. What it means is this, okay? It means that 1.051 of USD, this USD is equivalent to 1 euro. That's all it means, okay? 1 euro is equal to 1.051 USD. So you got to mind the convention here, right? You know, you can't go around asking for USD euro. Similarly, there's another Forex code, you know, for example, AUD, Australian dollar against the USD or the Aussie. You can't really go USD Aussie. It's just not coded, okay? So please mind the convention. So here's some of the examples of the currencies that you see. You know, the safe haven currencies are the currencies that people go to when there's problem with the world. And I usually, when I talk about safe haven currencies, you know, another safe haven is actually, you know, things like gold, Bitcoin, and all that, you know, gold and Bitcoin. But when something is wrong with the world, with the economy, people usually flock and keep their money in the Japanese yen and also the US dollar, okay? Now, on the right side here are things like the commodity currencies. You know, when the economy is going well, commodities are being sold throughout the world. China is, of course, a big consumer of currencies. So the commodity currencies are like the loonie. This is the Canadian dollar. Of course, they sell a lot of oil. The Aussie, you know, the Aussie is all about minerals, okay? The minerals, iron ore, and all that. It's all about Aussie, with the steel. And the Kiwi is all about, you know, dairy products. This is another group of commodities. But gold is also very much correlated to the Australian dollar. And, you know, whenever there's something wrong with China, okay, if China has a problem, like now in November 2019, there's a trade war between US and China. Of course, you know, you can see the currencies of Australian, New Zealand, and Canada basically go down against the US dollar because of the trade war with China. Now, in between here, you have basically the sterling or cable. This is the thing, the currency of Great Britain. Of course, you also have the euro. And when the euro economy slows down, again, because of the trade war and because of the taunts that Trump has been making against the Europe, the EU or European Union, of course, the European currency goes down. This is the euro. And of course, you have the Swiss franc. The Swiss franc can also be considered another safe haven, okay? And of all these currencies, basically, the Swiss franc is very special because the Swiss franc, a portion of the Swiss franc is actually backed by gold. So this is something very interesting that makes the Swiss franc basically a safe haven together with the yen and also the US dollar. Of course, the most liquid currency pair is the euro against USD, okay? Yeah, euro USD followed by USD JPY, which is basically US dollar against yen. And here is the euro against the US dollar. Then basically you have all the other currencies. So be aware of all this so that you know that when you're dealing with these currencies, you know what you're dealing with. Because, you know, it can get quite tricky. Now, when you talk about Forex, you really, I think it's a comparison between economy A and economy B, pair A versus pair B. For example, the Thai baht has been on a tear. In fact, the Thai baht has been, is at its highest against the Malaysian ringgit, okay, because Malaysia economy is not doing very well. You know, we had problems with our previous prime minister and the 1MDB case that resulted in a lot of money going, I don't know where it went, but you know, Thailand has been doing quite well. So despite the problems that they had with the general elections, but with the new king, things seem to have stabilized. You see the Thai baht going up against the Malaysian ringgit. It's also about interest rates and the carry rates. Naturally, if the interest of one country is higher than the interest of the other country, then the currency tends to rise against the other country. So let's see interest rates. And you can see how this really makes sense in the real world. Let's see the interest rates of some countries now. So here's the quotes here on the first page of investing.com where you see central bank rate. This is essentially the interest rates, okay? So the Fed is the USA. You see their rate here at 1.75, and you see the European Central Bank at 0. So are you surprised that the US dollar is up against the European the euro, BOE is also up against the BOE. We talk about the commodity currencies here, which you see here. Reserve Bank of Australia is at 0.75. BOC is the same as the US dollar. RBNZ is $1. So even if you look at the charts now, you know, for quite some time, the US dollar has been rising against these commodity currencies, and you can see why, because the interest rates here are higher than the interest rate here. Basically, if you have money, if you put in US dollar, if you have, say, Australian dollar, which is earning 0.75%, you convert it into US dollar, you basically get a carry because of the difference in interest rate, which is higher than the US, so you get a carry. So it is advantageous to you to convert the Australian dollar into US dollar, which drives up the demand for the US dollar. That's basically one of the reasons why a Forex currency pair would go up. So, you know, in addition to that, you see a lot of, you know, even the pricing of commodities could be affected by the Forex wars. Of course, when there's trade war with China, you know, it does impact the prices of commodities because the demand from China is down, right? So when the demand China is down, naturally the prices of the commodity currencies goes down. That's one of the interactions. Of course, if the country has too much debt, then the currency will go down because it can't face debt. Example here is like Argentina, right? Argentina, and you see runaway inflation in places like Venezuela, Zimbabwe used to be like that. A lot of geopolitics here also. For example, you know, the attack on oil installations has an effect on oil, definitely has an impact on Forex too. Also terrorist attacks, they're not that big, the impact is not that big, but it did have an impact before. So you see some of the strength of the currencies to all these shocks that happen in the world. You see how strong the Thai baht and Singapore dollar is, Philippine peso, and yet you see the currencies here that are most impacted by this. You see the Malaysian ringgit, Russian ruble, Kazakhstan, Sierra Leone. I didn't even know you were up here, okay? So this just shows you how currencies reacted. This is reacting to the renminbi devaluation. Of course, the renminbi was devaluated in response for China's response to the US trade war, because you see, as the US basically puts tariffs on China, one way for China to fight back is basically reduce the interest rates on their currency, then kind of even out, right? So that's it for now. Join me for a next time where we will even learn more about Forex. In fact, we will learn about the basics of trading Forex and a little bit of history on how you can learn about this exciting area, so that one day you can be able to build your own retirement fund. Okay, not only retirement fund, but at least something extra for you to take home rather than just your salary. Okay, this is basically preparing you for the future. Thanks very much, guys. See you later.